Today, I want to talk to you and step you through each of the different bank accounts that we recommend when you are setting up Profit First in your business. Now, if you already have multiple bank accounts, well, then this session is a good way to go through and do a bit of a review on what you have and what you need. And if you haven't started Profit First at all, then you'll be able to, in the notes, download a PDF which shows you all the bank accounts that I talk about, and you can take it from there and decide which bank accounts you're going to open first. For some people, opening one or two extra bank accounts is how they want to start. They want to start slow and steady. For others, they want to jump in and open all bank accounts at once, which either works for you. Just make sure that you do one and stick to it. And if you're only opening a couple of bank accounts now, that you place some time frames around when you're going to open the next bank accounts so you can get Profit First up and running in your business much quicker. Now, in Profit First for Tradies, there is a number of accounts that I recommend. So very first account that we should all have is our income account. So that is where all our income, so all our invoices that are paid to us from our clients, is paid into that account. Now, nothing else should come from that bank account. If you're starting out with Profit First, that may be your current account that you have money in and money coming out of. Now, the reason why I say that is because I don't want to give your clients any reason to not pay you. So if you open a new bank account and make that your income account, then you'd have to supply them with new bank account numbers. Now, for some clients, that may not be an issue because For some clients, that may not be an issue because they may only buy from you once or twice. But if it's a regular occurring client, then again, we don't want to give them any opportunity to mistakenly not transfer into the right account. So you may want to change your operating expenses account to your income account. The second account that we want is a materials and subcontractors account. So that is where we put money aside, as the name suggests, for our materials and our subcontractors. So we keep those funds there just to pay for those two specific purposes. Now, there's a number of reasons for this. Now, one of the reasons is because, again, we want to split it out. We want to see what it's actually costing us. But what will actually happen here is it is a really good check to make sure that we are quoting correctly, that we're allowing enough money for the materials, that we're allowing enough money for our subcontractors, and this bank account will tell you quite quickly if you are doing that or not. The next account we need to have is a GST account. Now, with this GST account, as it suggests, this is where we're going to put 10% aside of each and every invoice into your GST account. Now, as you know, 10% is what you need to put aside on the money paid to you, but you will also receive a refund from the government for things that you've spent. So by putting 10% aside, yes, you're going to have a little bit more money in that bank account every quarter than you actually need. But the reason why I say stick to 10% at the beginning is because it's an easy number to remember, but also many people that I work with have an ATO payment plan, they're behind one or two on their BASs that they haven't submitted yet, sometimes even more, and it gives you that bit of a buffer without having to have another bank account to save to catch up those types of things. The next account we want to have is your profit account. So as I said, this is the very first account. If you're only going to open one account, you open your profit account and you put 1% of every invoice into that profit account. Even if you do nothing else, and I highly suggest that you implement the system in full, but even if you do nothing else for now, open your profit account and put 1% in there. The next account is your owner's pay account. So this is where you put your percentages in there to cover your wage for the job that you do in your business. Now, if you're not taking a wage or not taking a regular wage, then that's something that we definitely need to work on pretty quickly. If your business can't support paying you a wage, and that wage needs to be the wage you would have to pay somebody if they were doing your job in the business, then that is a critical step that we need to work on straight away. Because if your business can't even afford to pay you, then it's going to be in some financial trouble, and we want to work on that. The next one is your tax account. So this is where we put aside the tax that the business, so depending on your structure, it will depend on what you call that, but that's the tax for the business. So if your business has not been making a profit, or has some carried over losses, then maybe your tax percentage will be quite small. Again, this is why it's really important to work with a certified Profit First professional, because we can assess and see based on your situation how we need to adjust those percentages so Profit First works best for you. And then the final account is the operating expenses account. So this is where everything else comes from. So your wages, your electricity, your phone bills, your fuel, and so on. Now, this is the last account for a specific reason. When you are running Profit First in your business, what it encourages you to do is to become resourceful. And by putting money in each of those bank accounts first, you are meeting all your obligations. You're meeting your GST obligations, you're meeting your materials and supplies, materials and subcontractors obligations, you're paying yourself, you're putting profit aside, you're making sure you've got money for the tax man at the end of the year. And at the end of that, what is left is what you've got for your operating expenses account. Now, in most situations, when we work initially with businesses, often there's not enough money in that operating expenses account to pay all those bills. That doesn't mean Profit First isn't working. In fact, it is showing you that Profit First is working really well in your business, because it's showing you that you don't have enough money to make and meet all of those obligations, and that we need to do something about it. Now, some businesses and some clients look at that and go, oh my gosh, that's so depressing. I look at it as an opportunity to fix it and make it better. There is always a solution. Sometimes the solution isn't the best solution that we want, but there is always a solution. And until we can see exactly where our business is going wrong, it makes it really difficult to fix it. Now, with your operating expenses account, if, for example, there's not enough in there to pay those bills, we don't go stealing money from those other accounts, because they have a specific purpose. And if we steal money from those other accounts, then you're taking away from other liabilities, and you're just going to make that problem bigger down the track. What we want to do, and the first step that we do in Profit First, is we do an expense review on your operating expenses to start with. Now, the reason why I like to start there is because 99% of the time when I do this process with clients, there is at least 10% of their operating expenses that are just going to waste, that are not necessary, that have not been necessary for a number of times in many instances, or that can be put on hold for the moment because they're not needed now. Now, doing an expense review for many doesn't sound like a super fun process. For me, it's one of my most favorite processes that I do with my clients, because not only does it patch that leaky bucket if there is money that is getting spent unintentionally, but also it makes us aware of what we're spending. Now, when I work with clients, I don't talk about budgeting in the sense that we have to do without and we have to go bare minimum and no, you can't have that particular tool, or you can't use that particular supplier. That's not how I work. I work on making sure that we are spending money on the things that we need to spend money on. And if that means using one supplier over another, because they are, they turn up on time, or they send the goods on time, or whatever it may be, then we're going to do that. So in that example, that would come out of your materials and subs account. In the operating expenses example, for example, if you prefer Telstra over Vodafone because Vodafone have terrible service and Telstra has great service, but Telstra is twice the price, then I'm not going to say to you, oh, cut that out and go with Vodafone because they're half the price. We say, no, actually, we're going to stick with Telstra because they provide you the best service, and you're not going to have missed phone calls, and you're not going to have dropouts and all of those sorts of things. But yes, it might cost you twice as much. Let's see what we can do and make the business be able to support that. The expense review is the first step where you get a really good overview of your business. And as I said, sometimes it's not great. For me, that is the opportunity because we can always fix these things. So that is the brief, broad overview of each of the bank accounts. As I said in the notes below, we will have a cheat sheet of what that looks like, and you can go through and do a review if you're using Profit First in some shape or form in your business already. See what accounts you're missing, what accounts you could rename, what accounts you need. And if you're not using Profit First in your business, as I mentioned, the very first bank account you can open is your profit account, and start putting 1% into that account today, and that will get you started. See you on the next episode.